Ever wondered why one of the world's top hearing care companies is trading at its lowest in months? At Insightful Value, we specialize in uncovering companies that might be overlooked by the market. And today, we're digging into Amplifon. Yes, the hearing care giant whose stock price has recently taken a noticeable hit. Stick around because we'll explain what's happening and whether this could be a hidden value play. This video is for informational and educational purposes only. It is not financial advice. Make sure to like this video and subscribe to our channel for more insights like this one. Amplifon is the global leader in hearing solutions, operating in over 25 countries with more than 9,500 retail stores and a strong presence in Europe, the Americas, and Asia Pacific. Their services include personalized hearing tests, fitting of hearing aids, and post-sale care, combining medical expertise with consumer-facing retail. So why is the stock struggling lately? Amplifon's share price has dropped around 20% since early 2024. This pullback can be linked to a combination of margin pressure, cautious consumer spending in Europe, and some soft earnings figures. Despite these headwinds, the company continues to show resilience in revenue growth, especially in international markets like the United States and China. In their most recent earnings release, Amplifon posted revenues of about 2.3 billion euros for 2024, showing single-digit growth year over year. However, net income margins have tightened, now hovering around 7 to 8%, down from past levels near 10%. Operating margins are facing similar challenges due to inflation in service delivery costs and higher marketing spend to retain market share. Amplifon hasn't been a dividend powerhouse, but it's consistent. Dividends have seen slight growth over the years, with a modest yield of around 1%. The company did not reduce dividends during the pandemic, showing a certain level of financial stability and commitment to shareholders. However, given the current market conditions and margin compression, aggressive dividend hikes don't appear likely in the near term. Let's talk risks. The company is heavily reliant on Europe, which is still experiencing muted economic activity. Plus, Amplifon is exposed to demographic shifts. It needs an aging population to drive demand. It also faces intense competition from both medical technology firms and lower-cost direct-to-consumer startups offering hearing solutions online. Another challenge is regulatory uncertainty, particularly around reimbursement policies in different markets. On the flip side, why might someone want to consider Amplifon now? Despite current valuation challenges, the company holds a dominant market share in a niche yet growing industry, hearing care. The global aging trend remains intact, and Amplifon's international expansion strategy is sound. Their investment in digitalization, customer experience, and teleaudiology could give them a long-term edge. While the market has punished the stock for short-term softness, long-term fundamentals may still be intact. If the company can stabilize margins and expand outside Europe, we might see a slow but steady recovery. Some analysts believe that the current price already reflects most of the risks, meaning the downside could be limited, though that's not a guarantee. So, should conservative value investors jump in now? That depends on your margin of safety and patience. The valuation may seem attractive, but only if you believe Amplifon can defend its market position, return to double-digit margins, and keep growing internationally without over-leveraging. At Insightful Value, we break down undervalued companies like this one, so you don't have to get lost in financial jargon. Whether you're just getting started or you've been investing for years, our content is designed to make complex financial stories easy to understand and useful for your own decision-making. You can find more in-depth reviews, charts, and data on Amplifon and other companies at InsightfulValue.com. Don't forget to subscribe to our channel and like this video to stay ahead of the curve.